Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, I want to talk to you about the tax tidal wave. You know, I talked recently about it's forecast we'll have $3 trillion of additional deficit spending over these next 10 years to get to a total of $7 trillion, and the spending is just continuing, folks. We've got the Biden administration launching their fiscal budget, right, coming out here in a few months, proposing anywhere between almost $5 trillion of additional taxes over the next 10 years. And then we've got forecasts out of the Congressional Budget Office that the national deficit over the next decade will grow close to 20 trillion. 19 trillion is their prediction. Folks, there's only one direction for taxes, and unfortunately it's going to cause a major tidal wave of taxes for those that delay and miss it. So go to retirementprotected.com, that's retirementprotected.com, and read in my video blog this week, and I talk about it on Hidden Wealth Radio, an exact example of how the deductions are going to come down, and they're going to continue to come down, and the tax rates are going to continue to be pushed up. And we know there's a guarantee of tax rates being pushed up under the Tax Cut and Jobs Act that is sunsetting either by the initiatives of this administration to push that earlier or sunsetting at the end of 2025. So we've got a real window of opportunity. And I think of clients like Paul in particular, who said, look, I'm looking for ways to pay the legal least amount of tax. I've talked to a number of different planners, my two different planners. None of them talk about taxes. I also think about Mary, and I also think about Kate, who we've recently met with. One, unfortunately, has another tax trap, unfortunately, because of losing her husband. And now she's a single tax filer with the brackets really sneak up on you, the higher brackets much faster. And she learned the tax risk road that she was traveling, the tidal wave of tax that she'd be facing, as well as the money that she'd be passing on for tax liability to her children and grandchildren. And her required minimum distribution, folks, was going to be almost $250,000 starting out. And she doesn't need the money, but the government does. And they're going to find a way to continue to tax it. And if you don't address it sooner, the later you address it, the more tax you're going to pay. Go to retirementprotected.com, that's retirementprotected.com, and look for the example in my video blog this week where I use a 24% tax bracket in showing somebody how we can use the tax code, because tax planning is very different from tax accounting or tax preparation. It's easy to prepare to be in compliance and know the dates and the deadlines to file by. It's another thing to plan so you can understand how to pay the legal least amount of tax. I talk about a really good couple articles this week about how not to fall victim to Congress thinking that they're doing us a favor by allowing us to delay the required minimum distribution age. And I also talk about how to not pay one additional cent of unnecessary taxes, and you can learn too. Go to retirementprotected.com, that's retirementprotected.com. One thing I'll teach you this Tuesday that's helped a lot of clients convert their IRAs to Roth IRAs is using this deduction, that you actually let the deduction absorb the tax liability, so you're not out of pocket anything and you didn't lose opportunity cost on the taxes should you pay them today. Because if you don't like the taxes today, you're definitely not going to like them tomorrow. But if you can use the deduction that is available today, it erases and moves away from you having to pay the taxes. And now otherwise spendable taxes are yours to keep and build towards now tax-free, what we call the Roth alternative Roth IRA. And I'm going to teach you both this Tuesday. Retirementprotected.com, retirementprotected.com. Don't fall victim of the federal government forcing you to pay taxes you don't need to pay, and get away from this tax tidal wave that's coming. You can protect yourself in mid-year tax planning. It's never too early and it's never too late to get a head start to be tax smart in avoiding the tax tidal wave. Retirementprotected.com.